Hello everyone, it is Evan from the Trade Risk here on Saturday, January 9th with a weekend market recap. We are first going to analyze the current market environment. We're going to look at some other markets, leading and lagging sectors. We're going to skip the individual names and go right into some trade ideas heading into next week. We're going to skip those individual names because most of them look the same, and that is oversold and beaten down. So we're going to kind of skip through that and get right to the good stuff on some of those trade ideas. Now, jumping into the markets here, the SPY ETF, we had a brutal week to start off the new year, as everyone I'm sure is fully aware of. It was, if I understand correctly, the worst opening week to any year ever in the S&P 500. And if that's not the case, don't quote me on it. It was, I think we can agree upon, a very bad start to the year. So down 5.86% in the S&P 500. That's what the weekly chart looks like, a horrible looking candle. Now, let's go into the daily chart and take a closer look at what really went on here. We started the year off with this gap lower. We gap lower 1.5% on Monday. And as we talked about in our midweek video on Wednesday, that was your first sign to maybe change gears or just recognize that something isn't right here, something has changed going into the new year. The reason that gap lower was very significant, in my opinion, was because it was right into a prior level of very important support. And it was that very kind of final last line of defense that the bulls really had to hold on to, which was around that SPY 200 level that we can see here. And that level was tested multiple times in the past. We had a 202 retest here in November that held. 200 tested in early December, tested once again in mid-December, and then this gap lower was tested, and it looked like it could hold, especially given the close on Monday. Tuesday was promising looking, and then Wednesday, once again, your second sign to take notice or change gears when we finally broke below that level. Now, when we broke below 200 here in the SPY, I told subscribers it gets a little dicey down here with prior levels of support. Once we were below 200 and we were looking for sort of the next level that we would potentially find support at, there really isn't too much in here. This was all loose, choppy trading in a very wide trading range. There wasn't a ton of volume that took place. There wasn't multiple, levels being held as support throughout September and October of 2015 in this range. So that usually tells me when there isn't a lot of prior volume traded in here, that price is going to move quick. And the levels that we talked about were really 195, and then down at 190 was the next level. So very broad sort of round number targets or levels that we thought might be able to hold. And, you could see we did stumble around 195 a bit, mostly intraday on Thursday, but ultimately we gave that up. We closed below it, and then Friday we saw a continuation lower. Now, if we look at where we've come from, we've dropped from 207 down to 191 in basically a straight line. It's as straight as you're going to see in the markets, especially with this type of magnitude of a move in the indices. So it's been a very fast unwind to the downside, and by basically any metric, any conventional metric to gauge oversold markets, we're there. We're in that oversold territory. Whether it's price action looking at Bollinger Bands, we're clearly below the 2 standard deviation lower Bollinger Band. If you want to look at market internals, the NIMO is oversold. If you want to look at percentage of stocks below the 200 period moving average, we're in oversold territory. All of the readings where we are now on Friday, where we closed, would indicate that we're at an area that markets tend to bounce from. Now, it doesn't mean, as it never does, that we have to bounce early next week. The point is we're at a stretched level, and we should expect the market to have trouble continuing to fall. Now, if we're in some type of crash scenario, then, of course, all bets are off. If we're in a true panic unwind, I guess we'll have to see if that actually happens on Monday. But traditionally, when we're this stretched, when we're this extended from, just look at the fast moving averages and how far we are from them, typically that is not sustainable behavior. And you'll see at least some type of sideways digestion or some type of market bounce. Again, To us, what that means is start to lightly look at names that are outperforming on a relative basis and start to put on some long exposure. We did some buying on Thursday. We did some more on Friday. Again, we're still very light, all things considered, maybe 30%, long, 70% cash. So we're still remaining very tactical. We'll be quick to take profits. And, again, I think that's the type of environment, at least for our style, that we're in right now. So I think, summing up the SPY here, clearly there's an issue here. We're below lots of prior support in the market. There's a lot of overhead supply in here. I think intermediate term, you definitely need to be cautious. Really here, you would need to get back above 200, this breakout area, this breakdown area, to start to get more optimistic here on the long side. Again, short term, we are oversold. Tactically, we can bounce here. You could play that for a trade, but there's been a tremendous amount of technical damage underneath the hood of the market and in the indices, so you do need to remain cautious here on those longer term time frames. So let's look at some other markets here. IWM, this is really where the big issue is. If you look at a weekly chart, look at this really large potential topping pattern here, and it is trying to confirm now to the downside. We broke below this very important 108 area, really far below it too, not just a little bit of a close underneath it. We closed underneath it by 4 or 5 points in the IWM. So certainly a red flag here. This is something to be concerned about. We were here back in late 2014. This did turn out to be a false breakdown, so that could happen again. Just recognize, though, lots of overhead supply in here. The small caps have been weak for quite some time. Now, if not sooner, maybe it was a time to take notice of it, but really you're starting to see that breakdown really start to surface and perhaps spill into some of these other indices, other names. So certainly the red flag here again, if you look at a monthly chart, you can see that even clearer. You can see the 8-period EMA just crossed below the 20-period, so some of those fast-moving averages closing below the slightly longer term moving averages, showing that there's momentum to the downside on the monthly chart now. So keep that perspective in mind. Once again, we are oversold here, clearly below the lower 2 standard deviation Bollinger Band here in the small cap, so can easily bounce, perhaps retest this breakdown level at 108. We'll have to see where it comes. It could be a false breakdown, or the more likely is really this trend continues to the downside over the next few weeks. The Qs broke down from this upper level range here at 109. Let's go to a weekly chart. You can see the most constructive out of all indices. You can see it's still hanging up here in the majority of this bulk of supply here, 104. This is another important level. Down here was the lows from August of late 2015, down around 102. We're still above there, but again, it's a little thinner down here. You can expect price to move more quickly. Down 7% on the week. Not a good looking sign here at all. Breaking technical levels. So more of the same here, below the 2 standard deviation Bollinger Band as well. So cause for concern across all indices, with the slight notion here that we are oversold in the short term. So let's take a look at some of these other markets now. TLT, this has been an area, if we look at a daily chart, this has been, the bonds have been a market where I've just kind of written them off as just messy, range bound, not my style, nothing I want to be involved in. But if you look at a weekly chart now, suddenly these are starting to take some shape to, the long side here. So the bullish scenario might be surfacing here. It's been digesting nicely. It's been in a long-term uptrend in treasury bonds. If we can start to clear above 125 on these longer term time frames, TLT starts to look pretty attractive here. It's put in a healthy base. Let's see if it can get there over the next few weeks. Had a nice 2.3% up week this week. While everything was going to hell in the equity markets, there were sort of a flight to safety here in the bonds. So keep an eye on this going forward. If we look at oil, USO, this one 10% down week. So starting off the new year, just as it did the prior 2 years, the downtrend still continues. We broke below the December lows, and we're trending lower here to certainly, multi-year, 7-year, 8-year lows. Whatever the case is, USO certainly in trouble. The trend is still lower, and it's tough to really fight this. No signs of a bottom here whatsoever. So it's certainly an avoid, or play on the short side, or some type of long-term hold if you're trying to accumulate oil on the lows. Natural gas, this is a trade we actually got involved in this on the long side on Thursday. We bought here as the equity markets were selling off on Thursday pretty sharply. Natural gas was up 4.7% on Thursday, breaking above this prior resistance here that it carved out for a few days. We got involved in this on a trade late Thursday, took some profits here at the end of the day on Friday, still holding the majority of it. We're going to see if this can continue into next week. I like it. There's a gap here that maybe wants to get filled. These are the trades that we look for when the market's really selling off, when it's starting to get really stretched. We want to see what's actually working on the upside, and this is what members and I look for on a day-to-day basis. So this has been a nice trade for us. Again, longer term, a very damaged chart, weekly chart. You can see it's been in a strong downtrend. This is just a trade, very likely be out of the rest of this on Monday or Tuesday, early next week. Not something I want to sit in and hope for another 20% in. Now, if we look at silver, still hanging out down here. It's below this $13.75, very important support level. We've talked about this. Nothing much has changed here. It needs to get above this area for me to turn bullish or at least neutral on silver. Until it does, it's still in a downtrend. It's still breaking support, and I would still consider this an easier short on the downside, looking for further trending downside action than I would on the upside. So something below 1310, I think you could play for a short breakdown. This is something I would be looking at. Otherwise, it needs to do something outside of this range. But I do like that it's getting tight here, and it is interesting sort of to play whichever way this breakout decides to resolve. Gold, we could see this resolve to the upside. So what we're looking for in silver is similar to what's happening in gold. If it can take out, and it did take out, this 104 area, you can see the surge, the breakout, the recovery back into this prior range that it was in late in 2015. So certainly the momentum has turned higher in gold. We're going to look to see if that can continue. I don't have a position in this, but it does look good. You want to see it hold above 104 going forward to remain pretty constructive here. So keep an eye on that going forward. Now let's get into some of the sectors here. I mean, most things are getting crushed, particularly I think number one here, semiconductors. A huge unwind here, very fast vertical drop after it got below this $53 support. Very beaten up. Perhaps we see one of the steepest kind of stretch downside moves here as far as sectors go. Perhaps we get some type of reflex bounce early into next week. Keep that one on watch, but certainly intermediate term, you need to be a little concerned here, given how fast the unwind and the rush for the exit doors has occurred here in the semiconductors. Materials, very similar situation, really beaten up, really fast, got below this prior pivot that we made in December below 42.25, and a very fast unwind. Energy, similar here, a pretty fast unwind. Oil, of course, has been not helping the situation, and even financials have been beaten up quite a bit this week as well. Certainly the underperforming sectors there, the top four, but really not many of them look due. The only sectors are the defensive ones that you can imagine. Utilities, they're holding up. You can see not flinching too much. They're range bound in a longer term time frame, but they're still hanging in there right at the 20 period EMA there. IYR, not at, got beat up here, especially on Friday, down 1.18%, but still on a relative basis. It's coming into some big support now, 72.50. See if it can hold that going forward. And the staples, again, beaten up a bit on Friday, but on a relative basis, much better performing and holding its own over basically every other sector out there. Now we're going to skip the individual names because, like we discussed here, most everything just looks horrible. Everything looks like it's potentially ripe for a bounce. It's all stretched to the downside as far as our popular technology names and previous leaders like the Apple, the Facebook, all that good stuff. So let's just get right into some trade ideas. Some of these are a little more boring because utilities and some of those slower moving sectors are what's working, or at least what's holding itself up there. Every idea I have here is on the long side, almost like a list here. If we do catch our footing and start to rebound next week, that's how you could look at this list. The first is Time Warner Cable, TWC. We've been talking about this one for quite some time. Managed to outperform nicely, closed up almost 1% on Friday. And this is a longer-term trade. This would be on at least a weekly time frame. Look how well it's still holding up here. It's not ready yet at all, but a back above 188, 190. Start clearing this cluster of recent highs. I think this one still likes to, looks good, performs nicely in this type of environment. Keep it on your watch. It's not ready just yet, but it is holding up and showing some nice relative strength. Next, ALGN. And really, I love this setup on a weekly chart. You can see just nicely building out this nice high tight base here on the weekly chart. It came out from a big breakout here late in 2015 up to the $65 level. Since then, it's been consolidating nicely. And again, this one's not quite ready just yet, but you can see the nice tight high pattern here on a relative basis, still looking really good compared to the majority of stocks out there. So certainly one you want to keep on watch. Next is ES. This one here, very similar situation, holding up really well. Utilities name, maybe a little slower, a little more boring. It's got a yield to it. But again, the weekly chart, take a look at this nice high, tight pattern here. It's been consolidating nicely. If you start to see more rotation into the utility sector, into these defensive names, you'd expect this one to clear these recent highs and start to make a run for it. Keep that one on watch. Next is SCG, another utilities name, but you can see similar situation to all of these, just nice tight high bases here that are performing and exhibiting strong relative strength. So SCG, get back above the 61.50 level. I think you can make a run here. And then finally, RSG. Last name, waste management, industrial sector. Republic Services, similar situation here, looking really good. Look at this nice, kind of methodical uptrend it's been in. Base breakouts all along the way. I think if you get back above 44.50, you start to look really good again on the uptrend. And as always, I save my best idea for my newsletter. It's free, traderisk.com/join, or just go to the traderisk.com. You'll probably get a pop-up there to join the newsletter. I'll have my favorite trade idea heading into next week there, along with other market analysis, commentary, and all that good stuff. So as always, thanks for watching. Good luck trading, and I will catch you next time.